Imagine turning $10,000 into over $37,000 in just 1 year. That's exactly what happened to savvy U.S. investors who bet on SoFi Technologies stock back in September 2024. Fast forward to today, September 24, 2025. SoFi has exploded 270% year-to-date, hitting all-time highs near $30 per share. But here's the real question burning on every investor's mind. Could this be just the beginning? With record profits, exploding membership, and game-changing crypto moves on the horizon, SoFi isn't just surviving in this fintech revolution. It's leading it. Stick around as we dive deep into why SoFi could skyrocket even higher and how you, as a U.S. investor, can position yourself for the ride. If you're tired of traditional banks charging you an arm and a leg, this video is your wake-up call. At its core, SoFi operates like your all-in-one financial dashboard. Picture this: you refinance your student loans through their app, boom, lower rates than your bank's 7% headache. Then, you park your paycheck in their high-yield savings account earning 4.5% APY, way above the national average of 0.45%. Need to invest? Their robo-advisor builds a diversified portfolio for pennies on the dollar. And don't get me started on their credit cards with 2% cashback or personal loans for that home reno. This isn't random, it's by design. SoFi's ecosystem thrives on cross-selling. Once you're in for one product, the app nudges you toward others with personalized insights. Hey, with your loan payoff, invest $500 in ETFs? Sticky like Netflix for your wallet. For U.S. investors, this matters because it drives lifetime value. A single member might start with a $20,000 loan but end up with $100,000 in deposits and investments over time. That's recurring revenue gold. And here's the pro tip. As a U.S. taxpayer, SoFi's FDIC-insured accounts up to $250,000 keep your money safe, while their tech edge dodges the legacy costs dragging down giants like Wells Fargo. In short, SoFi's betting on you, the underserved American, and winning big. Let's talk results, because as U.S. investors, we live for the earnings beat. SoFi's Q2 2025 report, dropped in late July, was a mic drop moment. Adjusted net revenue rocketed 44% year-over-year to a record $858 million. That's like adding another $300 million in just 12 months. Their adjusted EBITDA? Up 81% to $249 million, proving they're not just growing, they're profiting handsomely. Break it down. Membership exploded 34% to 11.7 million. That's one new member every 10 seconds. Products per member? Also up 34% to 17.1 million, meaning folks aren't dipping a toe, they're diving in headfirst. Fee-based revenue, the high-margin stuff like trading commissions and interchange fees, surged 72% to $378 million. Lending still dominates at 45% of revenue, but non-lending segments, banking and tech platforms, hit 55%, up from 39% last year. That's diversification, folks, less tied to interest rate whims. Net income? A cool $97 million with EPS at 8 cents, beating estimates by 33%. Charge-offs on personal loans dropped to 2.83%, down 48 basis points sequentially, signaling improving credit health amid cooling inflation. Student loan originations? Up 35%, primed for a boom now that federal moratoriums are history. For the full year 2025, management jacked up guidance. Revenue to $3.235 to $3.31 billion, EBITDA to $875 to $895 million, and EPS to 27 to 28 cents, more than double 2024's haul. Analysts echo this: 31% revenue growth in 2025, 23% in 2026. If you're holding in a Roth IRA, these compounding profits could supercharge your tax-free gains. So why the explosion? First, the macro tailwinds. The Fed's September 2025 rate cut, the first in years, is a gift. Lower rates mean cheaper borrowing costs for SoFi's loans, juicing originations. Personal loan demand could spike 20 to 30% as consumers refinance high-rate debt from 2023's peak. Inflation at 0.2% last month? That's breathing room for wage earners, boosting deposits. SoFi's now at $25 billion, up 25% YOY. For U.S. investors, this translates to NIM expansion. SoFi's net interest margin hit 5.57%, but with cuts, expect 6% plus by Q4. Second, student loans, SoFi's OG superpower. With 7.7 million federal borrowers resuming payments August 1st, refinancing volumes are set to surge. SoFi commands 60% of the private refi market. A 35% Q2 jump could double in H2. That's $2 to $3 billion in new loans, at premiums over 7% yields. As a US investor, think about the irony. The debt-crippling Gen Z is SoFi's rocket fuel. Third, the tech platform moat. Galileo and Technisys power 165 million global accounts for partners like MoneyLion. Q2 revenue here? Up 20%, with 74% YOY non-lending growth overall. This B2B gold, recurring, high margin, and scaling without SoFi's balance sheet risk. By 2026, this could be 30% of revenue. At $28.44 today, SoFi's market cap sits at $35.7 billion, up from $10 billion a year ago. Trades at 9x 2025 sales and 32x EBITDA. Reasonable next to PayPal's 10x or Upstart's 34x, especially with SoFi's 31% growth edge. Forward P/E, around 80x on 31 cents EPS, but dropping to 40x by 2026 as earnings compound 20 to 25% annually. Wall Street split, consensus hold with $19.88 average target, but that's lagging the rally. Bulls like Mizuho at $31, up from $26, and Needham at $29, see rate cut magic. Citigroup's at $28. Bears worry on credit, Deutsche at $21 hold. Our take? At 3.3x sales blended with peers, it's undervalued for 30% member growth targets. Long-term models, $36 by October 25, CoinCodex, $38 by 2030, Wall Street 24/7. If EPS hits 80 cents by 2027, 40x multiple gets you $32 easy, 7% upside soon, 100% plus in years. For US investors in taxable accounts, watch cap gains, but in an IRA, this compounding is pure magic. Professional investing means eyes wide open. First, competition. Chime, Ally, and Upstart are nipping at heels with similar digital perks. SoFi's edge? Full banking charter since 2022. But if they slip on UX, users bolt. Second, credit risk. Delinquencies at 0.42% for personal loans. Low now, but a recession could spike charge-offs to 4% plus, hitting provisions. Economic wobbles? SoFi's lending heavy, that is 45%, amplifies pain, as seen in 2022's 80% drop. Third, regulation. Crypto relaunch sounds hot, but OCC scrutiny could delay or derail. And dilution? That $1.5 billion share offering at $20.85 priced in August, smart for growth, but it waters down EPS short-term. Finally, valuation froth. At 270% YTD, any earnings miss triggers profit-taking. As US investors, diversify, don't go all in, but a 5 to 10% portfolio slice fits growth mandates. Peering ahead, by 2026, expect 23% revenue to $4 billion plus, EBITDA up 43%. Crypto could add $200 million fees. Student loans, another $1 billion originations. CEO Noto's top 10 US bank vision? With 20M members by 2027, market cap could hit $100 billion, $70 per share at 3x sales. Bull case, 50% upside to $45 if rates drop to 3% and crypto booms. Base, 20% to $36. Bear, flat at $25 on macro hiccups. For US investors, dollar cost average in now, by dips below $28. Long term, this is your hedge against big bank fees. US investors, SoFi isn't a gamble, it's a calculated bet on America's digital finance shift. From Q2's blowout earnings to crypto's relaunch and rate cut tailwinds, the pieces are aligning for SoFi to skyrocket past $35 soon. Sure, risks lurk, but the 30% growth trajectory and ecosystem stickiness scream opportunity. If you're building wealth outside the 9 to 5 grind, add SoFi to your watch list today. What do you think? Buy, hold, or wait? Drop a comment below, smash that like if this fired you up, and subscribe for more deep dives on stocks like this. Hit the bell. Next week, we tackle why Hood could double on crypto fever. Thanks for watching. Invest smart, stay free. See you soon.